This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. Welcome back to Invest Like a Pro. So it's Friday morning. I'm going to do, as of Thursday's close, I'm going to do a stock market update and going through the market conditions, looking at the S&P. I am going to take a quick peek at the Dow Jones, looking at the DIA, and to just evaluate this breakout, see whether it's worthwhile or not. So let's go ahead and get into this and start looking at some of these charts. Just briefly, if you want to learn more about my methodology, you can go to rabilstockresearch.com/book. I'm offering the book on a PDF format at a discount. So if you have an interest, go ahead and take a look there. Okay, so I've got the market conditions up on the left here, and we have sentiment at the bottom, and this is the Investors Intelligence Sentiment Number. So it's the newsletter writers, and I've been following it for over 30 years, well, right about 30 years, and I found it to be an incredibly effective tool once you know kind of what the levels are. So right now we have 54% bulls. I think if we get this number over 55, really closer to 60, we get into a little bit more dangerous position. And if this can get over 40, then again, you probably want to get a little bit more defensive. Right now, risk levels are elevated a little bit. It's not really in a bullish position. It's more neutral, but I think we're working our way back up again in terms of more bullishness. I think we're probably more like here on this spreadsheet. If we get any more, and especially if we get a jump over 40, then you'd put this on the this X on the negative side. In terms of OBOS, so I use a 5-period RSI on the S&P index, and we've been basically in this overbought camp. What's missing is we really haven't had a situation where this was here and people were bearish and we got a sell signal. We just haven't had any true signal to the downside, and I'll get into that in a minute. The other thing that's missing in terms of looking for some kind of a big downdraft here is the volatility. So I look at both weekly and daily volatility based on the average true range of the S&P. So this is the average true range, meaning taking all the movement of each bar, including gaps, and figuring out what's the price range for the daily and what's the price range for the weekly. And if you notice what's going on the weekly chart, do you see how small these bars are? There's just not a lot of activity on these bars. When we have low volatility, it's not a high risk period. So whenever we're below a declining moving average, the risk levels are pretty low in terms of looking for some kind of a big drop in the market. Normally what you need is an increase in the number, increase of the risk, and an increase of volatility first, and then you see the market drop down. Now there are times where we get sharp drops happen off of a peak, but this will coincide, meaning we'll be above a rising moving average right at the peak sometimes, but it's pretty rare for it to lag too much. It might lag by a bar or two off the top, but normally you've already got volatility going. And in both cases, both the daily and the weekly, I have to categorize them as positive because they're just not showing any increase in volatility yet. So I wanted to make sure that was clear. Now, I'm going to go through both the trend and the momentum in a second. What I want to do first is do something I haven't looked at in a little while, and this is my 18 MA chart in all 4 time frames. So I've got monthly chart, a weekly chart, a daily chart, and an hourly. And you know, sometimes it's just a really good exercise to go through and look at what's taking place, just looking at this, using it from a multiple time frame trend perspective, because we can see that the monthly chart was down, but we crossed back above that about 3 or 4 months ago. And now, if we get any kind of a pullback, this line is likely to act as support. So the longer term trend is showing significant improvement, but it's probably in need of some kind of a setback, pullback, pause to allow time for this to cup around a little bit more and fill in some of this air that it has. All right, now on a weekly basis, we turn this up back in March. All right, that's really where this time frame started to get going. We had the big green bar crossing back above, and the 18 started rising here. That really coincides with the change in trend. This would have been the 2 in a change in trend. If you look at this, we break the trend line, we come back and test. And then the 2, this big green bar coming up, is really here. And then 3 is taking out the high of that. But as you know, and if you watched my stock talk yesterday, you would have noticed that I love the 2 pattern. I like looking for the 2s. Now, the negative I'll say about this is that we've gotten a little stretched away. You see how there's a little bit of distance. There's an air pocket between the moving average and price. So whenever we see that, we know that we're kind of getting into an area where on this next lower time frame, we should be looking for signs that the momentum is slowing. Now, we'll get into the momentum in a second, but here's the one thing I really wanted to point out. Look at this move. We had this sideways consolidation. We move up, we kind of test this area, get a little below it, and then look, we get a pivot low here in June. And then we get another pivot low here and later in June and then in early July. Do you see how much respect we have for this moving average? To me, this is the line that's the key right now. So I know this is the one that's controlling the trend, but I think this is the key one to watch. Why is that? Because it's been tested 3 times. And if we break that line and it starts to flatten, then we increase our odds of making a full-fledged correction back to support on the next time frame. So we change the hourly breaks all the time, right? I mean, it's not as meaningful. But in this case, this has been going on for a few months. I think this is a very important line. And you know you have an important line on your hands when you can draw in the trend line and it's exactly the same. When you can't see the 18 MA when you draw on your trend lines, you know you've got an important line in place. All right, now let's go ahead and add in our momentum indicators, and MACD has turned up on the monthly chart. We have had movement here that's sort of confirming what I'm saying with the move above the 3 to 4 month move above the 18 MA. That tells me that we've probably got underlying support in place. That's what MACD is telling us too. Because remember, if we get a pullback here over a couple months, we're going to form some kind of a pinch as this line is cupping around. This orange line is the trend line in MACD, and this is the oscillator, right? This is kind of like the shorter term line. So we want to look for pullbacks in the shorter term line towards the trend line in the direction of the trend line. So the trend line turns up and we get a pullback. That's what we're looking for. So that's really the next thing we want to look at on this time frame. If we go and look at the weekly, which I said I think is in control, but look at what's going on here. We've had a downtrend in place. We've turned this to the upside. I've drawn in the channel lines, and I've also pointed out where we've had some issues in the past, right? Here is a bottom and 3 tops at this level here. So we're up into this zone. We're also in the upper channel line using a parallel channel. So we've got some issues up here. Now here's the good news. Because by the time we've reached this, look at the strength and the momentum pretty much across the board. Even the volume pattern, I think, is pretty bullish. There's no real signs of distribution on the weekly chart, at least. And I think that's a very good sign. But we're overbought. So we're overbought inside the trend. It makes sense that we should see some kind of a pullback take place. Now, here's the key. If we don't get a pullback here, if we don't correct, then we're probably going to do some kind of a climax type pattern where we go and maybe even try and break out and hit an all-time high, and then we make some kind of a climax pattern, and then I bet we go through a little bit more extensive corrective pattern. So the orderly thing to do, the right thing to do, the most bullish thing to do would actually be to pull back in here, pause for 2 to 3 weeks, and set ourselves up for another move. Now, if we look at something like the Dow Jones, so just to give you an idea, the S&P was down 66 basis points today, right? If we look at the Dow Jones, it was up 50 basis points today. And I had drawn this line in, this trend line in a little while back. I did a I mentioned this a few weeks ago, watching for this trend line break, and I think this is in a much better position than the S&P right now. We had green over red prior to the breakout. Okay, so this little follow through here today, I think is a good sign. MACD's in a pretty good position. So I guess the point I'm making here is it would not surprise me at all is if we continue to move higher, if we see the Dow Jones start to show some signs of outperformance for a while. I'm not saying it's going to take over, but it might sort of take the baton right now and take a short-term leadership role while the S&P and the Qs and the NASDAQ take a breather. That obviously the QQQ took a little bit of a hard hit. It's pretty extended, very much like the S&P. All right, here's one point I do want to make sure I cover though. The daily chart isn't really showing any signs of momentum loss yet. Okay, and until we break the 18, really break it, that would be a break below and cause it to roll over. I think we've got a pretty good trend on our hands. All right, and I don't know that I want to go down and get whipped around on this time frame. What I want to do with this time frame is look for entries on pullbacks. So if we get another orderly pullback towards the 18, I want to look for an opposing trend trigger on this time frame to get long. So we're going to be looking for this to hold the zero line or something like it. Maybe this to get down to a low level below both DI lines and the ADX on the hourly, and that could set up another buying opportunity. Now, it is important to recognize if this is a violent break, a violent pullback, we're going to get overrun in MACD, we're going to get sellers showing up on the red DI here, and we're probably not going to hold the 18-day, and that means we go through something a little bit more serious and maybe come a little bit closer to the mid-band or the 18 on the weekly chart. All right, so that'd be what I'd be watching for over the next few weeks. Just have your key levels, continue to watch them. In terms of price for the spider, 445 is pretty strong support on a pullback. All right, have a good weekend, and we'll see you next time.